If you're trying to position your portfolio for big gains and downside risk, we've got the video for you here today. I'm covering 4 long trades and 2 short trades with clear catalyst on the companies. They're all fundamentally sound and they could move fast in the next few months. I'm going to break down the clear catalyst going forward and show you the live trades on the trading platform. So go ahead and smash the like button down below and subscribe, and we'll jump into it. All right, guys, this first company is the AI landlord. They pivoted from crypto mining to building AI data centers, and it's working. They've signed multi-billion-dollar leases with players like CoreWeave and NVIDIA. Essentially, they're becoming an AI landlord, renting out compute space for high-performance workloads. Revenue's up 84% year over year, and growth looks unstoppable. Yes, they're losing money and heavily leveraged, but when your tenants are AI giants, that's a risk I'm willing to take. All right, guys, we're on the Tasty Trade trading platform and brokerage. There's a link down below. Check it out. There's some benefits if you go through my link. This is my favorite for trading options. All right, the first one is Applied Digital Corporation. And you know what these guys do. They're the leading provider of AI and high-performance computing data centers. So obviously a booming sector right now. If we look at the trades that I have on, I have 2 poor man's covered calls. So what those are 2 deep in the money leaps and 2 calls against them. And let me show you exactly how that's done. So we're going to go to the trade page here. And I'm going to go about a year out. I'm going to go a little longer than a year because the cost for the money, if you look right at 32, which is just in the money, it's 15.10. But if we hit the expiration date here and go a little further out, we can go all the way to 447 for 16.40. So for another $1, another $100. So that's a no-brainer for me. So I go out right now to January. I've got 2 with the 30 right now. I'm going to go to the 32. 16.40. The mid price, we'll click right here, is 14.80. So under $15. Now, one contract controls 100 shares. So that's 1480 times 100 shares. That's $1,480 to control 100 shares of stock. That's the beauty of options. Versus you'd pay twice that much, 33 times 100 shares, if you bought the stock outright. And we're trading this monthly, not daily, but we're playing the trends, and long term, this is a $30 stock that's going to be at $100. I'm confident within the next year or two. So 1480, we're going to close that up now. And what I like to do is sell a short-term call against it. So that makes it a poor man's covered call, just like a traditional covered call, except instead of owning the stock, buying the stock, you're utilizing the leaps option. 55 days out to expiration. I like to go closest to 45 days. We'll open that up. And then I've got the 440 strike calls right now. That's what I would do right here. Is I would click on the sell. We've got calls on the left, puts on the right. We'll click on the call, $4. That immediately goes and reduces our cost by $400. Now we're at $1068. So for $1,000, we can collect $400 a month. We can roll this short call every month and do this monthly and pay off this the cost of doing this in just a few months, actually just 2 or 3 months, which is incredible for Applied Digital, and it moves like crazy. If we look at the chart, you can see it's way up right now, but still, you can wait for a pullback, but since we're selling both sides, it really doesn't make a huge difference. And if you don't have it on right now, now's a good time. It may not fall back down too much. But back to the trade page, we hit review and send and place the trade. You guys know this one. It's a social media powerhouse. Meta dominates the digital ad world. Facebook, Instagram, WhatsApp, and Threads. Over 3 billion people on Facebook, over 2 billion people with more access across the rest. Even in a slower ad market, advertisers are cutting from smaller platforms and spending more with Meta. Their AI ad engine is crushing it. And with a forward PE of under 30, the stock's still a bargain. All right, guys, with Meta right now priced at $738. And you can see right here, $867 is the analyst target. So quite a bit higher what is that, 10% higher than where it is right now. And you can see the solid chart moving up. These guys continually kill it. If we look at the, actually, let's first look at the earnings. You can see consistent earnings beats quarter after quarter, and super strong balance sheet as well. But if we look at the stats page, this is just Yahoo Finance, and you can see some of the numbers, but the forward PE of 24, that's unbelievable for a stock of this caliber right now. Now, one of the things that I like to do is look at the base case numbers, valuation going forward, and you can see my valuation shows $1,000, trading at $738 right now, but just based on the numbers and the value of the stock. And then year 2, $1,200, and year 3, $1,400, and that's using a conservative revenue growth per year of 17% and net income growth of 20% and a forward PE multiple of 30. So I plug in these numbers. I actually got them right off of Yahoo Finance from their earnings reports, but you can see 178.8. If you look down here, revenue 12-month trailing 178.8. Net income 71.51 right there. Shares outstanding over here implied 2.51. Actually, it's less than what I've got in there, so that'll even make the numbers better. But hey, if you want this this table, I just shoot me a comment down below and say stock price projection, and I'll shoot it over to you. All right, so let's jump into the trades on the platform that I've got on right now. For Meta, you can see I've got a poor man's covered call and then a credit spread. So it is a higher price stock. Let's start off with the poor man's covered call. I'd go out 328 days. Right now, I would probably go to the 730, click on that to buy the call, and the cost mid-price $11,435 because one option contract controls 100 shares, so we multiply it times 1,000. So 11 grand. So I'm going to show you the credit spread as well if you don't want to invest 11 grand in an option trade right now. But again, much less than the 738 price times 100 shares, which is 73 grand utilizing stock. So if we go to the curve mode, I love this on the platform. You can see just like owning the stock outright, as the stock price goes up, our profit goes way up. So if we get up to that 1,000 price, this comes to 20 grand up here. If we get over to the $1,036, you can see the P&L at expiration. But let's go back to the table mode, close that up. And then what I like to do is sell the call against it, open up December. And right now we're at 738. You can go all the way out to the 800 and collect $1,985, so almost 2 grand, and you can do that every month. Pay this off in less than 6 months, and then you're making 2 grand a month going forward. So to me, that's why I love the poor man's covered call. But as soon as I click on this to sell, you'll see the cost come down from 11,000 down to 94.27. So we hit review and send and place the trade. But what I'm going to do, I'm going to clear that out. I'll show you real quick the credit spread that I would do as well. I would go to I'd go out to December, closest to 45 days. And then we can sell this. Let's try the 710, $700, $10 wide. We can collect $3.62. You could even go to the 700 and collect a third the width of the strike. Yeah, 330, exactly a third the width of the strike. And that's what I kind of shoot for. So if you go to curve mode, and you take a look at this, I've got other trades on, so it's affecting this. So curve mode is not going to work real great right now. But let's go back to the trade page. Let's go back to table mode. 700, 690, and we collect $3.30. And yeah, it should show. But yeah, we can 738. Yeah, because I've got those others on, it's affecting it. But what we do at this point is just hit review and send and place the trade. This next one's the AI hardware enabler. While everyone chases AI software, this company quietly builds the servers that run it all. They're growing 40% plus in AI server demand and guided for $40 billion in revenue by 2026. All right, guys, ticker symbol SMCI, super microcomputer, Yahoo Finance, the summary page. we can look. They've got a 1-year target of $50, too low. If you look at the chart right here, you can see it was just up over 100, 113 just back in February of 2024 last year. So huge upside potential. I like to see when there's a lot of headroom right here, and it's been that, at highs before, and there's really no reason for it being down. The data center build out is coming. We know that. If we look at the forward PE, it's 20, and the price to sales is 1.5. So to me, that's screaming buy. And if we look at the growth rate for next year, this year 24%, next year 34%, unbelievable. So let's jump on the Tasty Trade platform. I've got 2 poor man's covered calls on right here. 419 days out, the 45, and then I sold 55 calls against it. So let's go to the trade page, out to December. You can go right here at the money, just in the money, 48. Click on the buy, and we can go to the mid price, $15.65. So that's $1,500. So very nice price, inexpensive to play in the super micro game. Now we can close that up, and we can sell in December, 55 days to expiration. I would go right here, the 320, so we can collect $320 every month. Basically, it's gonna adjust slightly every month, but basically $300 every month. We pay this off in 5 months, under 6 months. But let's click on that. Boom. 1242. We hit review and send and place the trade. This one's the FinTech disruptor. SoFi is turning the traditional bank model on its head. Student loans, investing, full bank services, all under one roof. They've got 34% member growth year over year, 53% CAGR growth over 5 years, and rock bottom customer acquisition cost. Their secret, they stay asset light. They sell their loans instead of holding them. All right, guys, with SoFi, here's the big thing. Look at the earnings beats quarter after quarter. That's one. And then the revenue and our earnings just increasing quarter over quarter. Anthony Noto, their CEO and founder, is unbelievable. Super strong management and CEO. If we look at the growth, 114% for the current year, and next year 67%. So this stock is going to just keep going up. It'll be $100 soon. It shouldn't trade like a bank, a typical bank. It should trade like a tech stock. And the Galileo platform is a partner platform. There's likely to be a couple of recessions over the next 10 years, maybe at least one. And as Noto knows, he just needs to keep asset light, and that's what he's doing, and not over leverage. And he'll get through those recessions and continue to kill it. So right now, I've got 4 different poor man's covered calls on right now. So the leaps and then the short calls against it. So what I would do is I would go out to January, 447 days. I would probably go right in the money at the 27 strike and click on the 27 strike to buy. We can buy that for $1,000, $995, and then I would close that up and I would sell the December 55 DTE call against it. I would go out right around 35 probably, and bring the cost down to 853, and then review and send and place the trade. All right, guys, I've made a couple of videos lately on hedging. These next 2 are hedges. So we can't always bet everything's just going to go up because there are pullbacks in the market. So I like to make money when the market pulls back as well. And if you make that money on the way down, then you can utilize that money to go long once we have that pullback. So the first one is an overhyped hybrid right now. I love it. I only follow stocks that I like, but it's just priced too high right now. This company is a mix of data storage and crypto mining, and it's been riding 2 bubbles. Some say they're bubbles, but I don't think they're bubbles. Both data storage and AI and crypto mining are here to stay for the long term, but sometimes they get overhyped and priced too high. So their valuation is stretched, and real estate exposure is heavy, and sensitivity to both crypto and rates is risky. All right, guys, Iran ticker IREN. They've missed 3 out of the last 4 quarters. They are a strong company. I like both the sectors, AI and crypto. You can see the revenue and earnings increasing quarter over quarter, and huge growth rate, 79% next year, 179% this year. So I like the stock, but the problem is it's just made a big run, and I'm using it as a hedge. You can see I've got 2 call credit spreads on in November, and that's what I would put on right now. You could do a poor man's covered put as well. I've done a video recently on that, so check those out if you want to know how to do that. It's a little bit more aggressive play, but if we look at the chart right now on IREN, it's gone parabolic. So I'd like to set a credit spread up in this range. If it keeps going up, it's not going to, go up to infinity and never stop. So I'm banking on the odds that it stays below that. Plus, if it does do that, that means all the other stocks in my portfolio are going to be killing it anyway. That's going to more than make up for the loss in IREN. But when it's up this high, I like to play the odds and understand that it's more likely that it's going to stay under that top, that cap. The risk of it going higher is much less than moving lower. So I'm in November right now. It looks like, wow. Okay. IREN. Yeah, I'm still in November, 27 days. But if I were to put on another one, I would go December, and then we're going to go on the call side, and we could go out. Let's go 90, 100. That doesn't give us enough premium. So you can go 80. Now, I even do more than that. I would go 75, 85, collect $2.20, and 75, 85, $2.25. So as long as we stay under, we can go all the way up to here. It hasn't been that high yet. So 75, 85, we stay under that, and we collect $220 in the next 55 days. No brainer. And you can place, as many contracts as you want. But, I always like to scale in at one point or one time or another. So you could hit review and send and place the trade. And if we go to curve mode, you can actually see as long as we stay below that short strike level, then we make the full profit. All right, guys, the last one. This is the hedge against perfection. And when I mean perfection, I mean right now it's priced for perfection. This one's controversial. Tesla is a company I love long term. Robotics, energy, storage, AI, but valuation's just too far ahead right now. Even with $37 billion in cash, massive free cash flow, and innovations like robotaxi and humanoids, it's priced for perfection. All right, you guys, this is my favorite hedge right now. And Tesla's not a car company. It's a humanoid, robotaxi, AI, full self-driving, energy storage company. So it's a tech company. And right now it's trading at 433. If we look on the chart, this is going back to 2021. You can see it's trending up. We're at the top end of the Bollinger Band and top end of the trend. So this is when I like to short it. I love it long term, but it's just priced too high right now. If we look at the positions that I have on right now, I've got 2 call credit spreads at 470, way above the market. So if you look here, you can see we can go all the way up to 470. I still make max profit on that. So you could place a call credit spread in Tesla, and or here's the other hedge I have on, TSLZ. Now look, it's a 2 times inverse Tesla ETF. So Tesla moves. It's more volatile than the Qs. So it kind of trades just like the Qs as a tech company, but when the Qs move 3%, Tesla moves 5%. So it's an extreme. So I like TSLZ, and what I like about it is just buying the shares because it's a 2x leverage. It's what you pay up front. I've got $2,500 or 2,500 shares on right now. It's trading at 0.71. So you can buy as many as you want, but just buy the shares outright. And when there's a drop in Tesla, this will move up. So you can do call credit spreads or TSLZ, which I like. And again, $37 billion in cash, $7 billion in debt. great long-term play. It's going to hit $10 trillion someday, but too high priced right now. So TSLZ, if we want to just purchase the shares, it moves up just like owning the stock. We can go stock, long, go. And because the market's not open, it's not letting me do it right now for some reason. But you guys get the picture. If we wanted to do Tesla call credit spread, then I would just open up, go to table mode. I would open up December. I'd go up above the market. You can go out all the way up to 500, 510. You can go down 470. We want to collect a third the width. 470, 480. You could collect 285. You go 460, 470, and collect 327. That's a third the width up to 460. Curve mode. You can see we profit. It allows the stock to move up even. But again, I think it's going to move down in the short term. We hit review and send and place the trade. All right, guys, those are my 4 longs, 2 shorts. Let me know in the comments down below what you think of those trades and what you're doing. Make sure to like and subscribe, and check out the free options workshop as well in the link below. And there's a paid course as well if you want to level up your game and trade the way that I trade. And if you like this video, watch this next one.